Badass business owners, welcome to another episode of the Local Small Business Coach Podcast, where each episode we work on getting you to $100,000 in take-home pay. So if you're all ready to boost your profits, increase your sales, improve your processes, and develop stronger teams so you can stop living job to job, then let's dive in. Hey, badass local small business owners. Welcome back to the Local Small Business Coach Podcast. How are you today? Well, today is Thursday, and I always like to try to tackle questions either I get from you guys through my email, through the Facebook group, through my one-on-one coaching. But today I want to tackle a question that I tend to get a lot from folks, especially from those of you that are newer to business, or you've been in business for a short period of time, or you just haven't quite got your arms around the back end side. And there's a lot of, and this has to do with numbers. There's a lot of numbers out there, and there's a lot of people with a lot of advice telling you, you need to know this number, you need to know that number. And you're going to hear from me. There's certain numbers I'm going to tell you all the time that you need to know as well. Now, by the way, whenever I talk about numbers or anyone talks about numbers, please know you do not have to memorize numbers. If you can, great. But for most people, look, you can tell me your phone number and I'll remember the first 3 digits if you're lucky. I don't remember a lot of numbers. Now, I do tend to remember goals that I have. For example, if I know I want to make $100,000 by the end of the year, then I'm going to remember that number, right? Just like yourself. If I know I want to make $150,000, I'm going to remember that number. But if you were to say, hey, what was 3 weeks ago, what was that number? I don't know. But here's the thing. I'm going to be able to find that number. I'm going to find that number because it's either going to be in my phone, it's going to be in a spreadsheet, it's going to be in my profit and loss, it's going to be somewhere. The key is you need to understand what the number means. That is the most important thing. It's not so much about being able to spit off the top of your head what that number is, as much as what does that number represent and why is that important to me in my business? So I thought what I would do is I'm going to step back today and I want to go over 7 numbers that you need to understand. Now, the cool part is every single one of these numbers can be identified for you, the actual number. But you need to know what they mean. So when you're involved in a conversation with someone on business, you'll know what they're talking about. If you are listening to a podcast and they talk about that number, you'll know what they're talking about. If you're taking a training course and they bring it up, you'll know what they're talking about. If you're talking with a business coach, you'll know what we're talking about. Whatever the case may be, there are important numbers that every single local small business owner should know and should understand. Because, by the way, you have seen these numbers. You've seen them before. You just may not have understood what they meant. So I want to start with that. So the first one that I want to talk about is an easy one. And this is, and by the way, let me kind of step back for a second. The first 5 that I want to talk about are actually on your profit and loss statement, your P&L. And hopefully every single one of you guys have a profit and loss. This is important to your business. And by the way, there's no way you can do your taxes or see your company's business if you do not have a profit and loss. So it's very important that you do this. Matter of fact, it's one of the courses, or at least one of the video training courses that I want to put together for in the membership site that I'm putting together, because I really do think that this is important. And I want to have a video that allows people to kind of see what I'm talking about. And I'll actually use one of my old profit and losses as an example. So I'm going to try to work on that in the next month or 2. So I'll share that with everybody once I do it. But in the meantime, the first thing is you all should have a profit and loss, whether you use QuickBooks, whether you use FreshBooks, whether you use any of the other accounting books. If you do it on a spreadsheet, you probably have these numbers, but you're calling it something different. Whereas if you're using a program, they're going to probably call it something similar to what I'm going to share. Now, you may have heard some of these numbers called something different. That is possible. Sometimes people do that. Sometimes people grow up with it being said a different way in their business. Especially if they worked for another company, they may have called it something. But the important thing is that you understand and know what that number means. So let's start with that. Obviously, the very number one number that you need to know are your sales, your gross sales, your top line revenue, your income. So you'll hear this called sales, revenue, income. They're all the same. It's basically all the money that comes into your company. It's your top line sales. Now, a best practice that I think that almost everybody could do out there is to break it down by category. For example, when I had my ice cream shop, the thing that I did is I had it by different things. For example, I'd have cups and cones, I'd have sundaes, I'd have drinks, I'd have the different categories that I had. For almost all of your business, you could do the same thing. So for example, let's say you had a cleaning business. You could say your reoccurring revenue, so your homes that you go into all the time, that could be one category. It could be commercial. You might break out commercial from residential. You might have a category for real estate agents, business that you get through realtors. You might have, so here's the thing. These categories are just for you. And the reason that they're important is because they are different parts of your business. And it helps you make very important decisions down the road. For example, I'll go back to my Baskin-Robbins days. We started to do soft serve. And the whole point with soft serve was to be able to go against, for example, a Dairy Queen or someone else that has soft serve. Well, it was such a small percentage of our business, but there was a time when we were putting so much of our energy into this little tiny baby category that wasn't even 1% of the business. But meanwhile, here's cups and cones that are 50% of the business. So where should I spend my time, money, and energy? I'm going to spend it on cups and cones, one of my larger categories. So if something has to drop, if something has to go, it really helps you understand. The other thing is it allows you to be able to track your progress within that category. So for example, let's say you want to raise a piece of your business in a certain category. By you having it broken down by the category, you're able to see your percentage of increase or decrease month over month. And they're fantastic. And all of these numbers, but specifically this one, it's great to look at month over month, year over year, how your trend through the entire year and whatnot. Plus, what's cool about the categories is if you lay them all out, you're able to see going, oh, wow, this category spikes in these months and it dives during these months. Or let's say you're trying to pick up business in the winter months. Well, which categories tend to do better in the winter months versus the summer months? So definitely know your top line sales number, but I really want to challenge you to break it into categories. Whatever categories make sense for your business. And usually the categories, you don't have to get like super crazy and have 20 categories. That's not what I'm saying. But if you could have 3 to 5 really good, solid categories of where you get your business or what types of things that you do, that would be ideal. So this way, for example, if you're a handyman and you probably touch a lot of different things, you could say, for example, you could have a category of times when you do painting jobs or plumbing jobs or electrical jobs or jobs you got from different areas of the business. So whatever it is, play with it. There's no specific right or wrong answer, but you just need to know what your sales are and then create the categories that make the most sense for you. And by the way, this is something you want to do long term because it's really nice when you start racking and stacking year over year, month over month. It really gives you some great, fantastic insights into your business. It's actually one of my favorite things. Even when I was with Home Depot, I loved being able to have my categories broken down because it really helped me know when I needed to drive sales, which categories did I need to jump into to try to drive more of. And same thing with both my, with my small businesses and with the big box retailing. Categories are a wonderful place for you to be able to identify sales opportunities as well as profit opportunities. So number one, number that you need to understand, sales, revenue, income, whatever you want to call it, you want to make sure you know that. Number two that you need to understand are your costs of goods. And basically your costs of goods is what it takes to purchase, and it could be a couple different ways. Let me kind of step back. Basically, it's the costs associated with putting your product together. So your costs of goods would be the things you have to buy over the counter from somewhere else. That's going to be a cost of goods. What's it cost for you to get those materials to do what it is that you do? So for example, it could be the, if you're going to install a water heater, then obviously it's going to be the water heater and all the supplies and everything that it takes for that particular thing. In some cases, if it's something you have to assemble, in some cases it might include the labor to assemble it. Now, I don't want you to get hung up on labor. Some people are going to tell you to break the labor into 2 categories. One that helps assemble things together. One is the stuff that you use for sales. It could be an expense. It could be part of cost of goods. I don't want you getting hung up on that. If you belong to a franchise and it's really important to them, great, go with whatever they tell you. But for the rest of you, just keep your labor on something separate. Now, would I want you to know it for as you go to expand your business and go from a solopreneur into someone else? Absolutely. This is actually a conversation I have with people when I'm coaching them, because if it's going to cost you 15 minutes of time to put something together or to do something, what your time's worth versus hiring someone off the street. But that's a whole different conversation. Do not get hung up on the labor piece. But I do want you to understand your cost of goods, everything that it goes into, help putting that together. Back once again, if we use the ice cream place, you've got the ice cream, you've got the cups, you've got the straws, you got the spoons, you got the napkins, all of that. I also, believe it or not, had to count even my cake toppers. When you make the cakes and you got the little toppers, that would be a cost of goods. Those are things that it took to be able to put my products and stuff together. So same thing with your business. Make sure that you're doing that. And also, once again, I break down in category, very similar to your revenue side. When you broke those down into categories so you could see sales opportunities, I want you to do your cost of goods broken down into categories as well. Because as you dive in to try to find opportunities for more profits, one of your best ways to increase your profits is to buy things at a better cost, but also to make sure that you are leveraging your cost of goods and how much they take of your profit. So break down your cost of goods just like you would your sales, put them into categories. I think you're going to find some great success when you start looking at them, racking and stacking them and everything else. And if you're trying to improve your profits, your cost of goods is a great place that you're going to start to dive into. It's actually one of the first categories that you're going to go look into on how you can control that, because sometimes your cost of goods are driven up because you are buying inventory that you don't need yet. Instead of buying inventory as you need it, you're sitting on 2, 3, 4, 5 months, and you can kind of see where those spikes happen. So cost of goods, basically the cost associated with putting your product or service together. So first, you want to know your sales revenue. Second, you want to know your cost of goods. Now, the next number that I really want to make sure that you understand is your gross profit. Now, your gross profit is basically going to be your income, your top line, minus those costs of good. So gross profit, this is the profit you make just by taking your sales minus the costs of the goods. Now, don't get hung up on expenses. We're going to come up to that one next. But for right now, your gross profit is the profit you make when you take what you sold minus the products that you needed to be able to make those sales happen. And that's going to be your gross profit. And from here, this is where the rest of the stuff is going to get taken away. So sales minus cost of goods is going to give you your gross profit. And we're going to come back to that and what you do with that number here shortly, so don't get too hung up. But that's going to be your gross profit. The next number that you really need to know and understand are your expenses. Now, your expenses are going to cover basically everything else that you spend in your business. You're going to look at advertising, insurance, cleaning supplies, employee expense, office supplies, rentals, renting equipment, training, repairs, utilities, you name it. Basically, any other time that you spend money in your business is going to go under your expense category. So really, where your money's going, once again, is either going to go into the product cost or it's going to go into the expense category. And once again, your expenses, do not just have them rolled up. It's one of your numbers, but I want you to make sure that you break down your expenses into categories just like you did on your sales and just like you did on your costs of goods. The reason you want categories, same exact reason, right? We're looking for trends. The best way for us to identify profit opportunities is to see where the money is going. You need to know how much of your money is going out in your rent. You need to know how much you're spending on rental equipment. You need to understand how much you're spending on different advertising and stuff like that. Advertising is one of the best things that you're going to be able to do to drive sales. You need to have money set aside in that category. So you need to see, am I getting a return on that investment? So everything kind of starts from you understanding what your expenses are and where that money is. So on your expenses, I want you to do the exact same thing. All the other categories, most things should fit into it. And most QuickBooks, FreshBooks, all those different programs and stuff that you use, they usually will have some pre-made categories. Can you have too many of them? Probably. Can you have a lot of them? Yeah. But in most cases, you can kind of roll them up. At minimum, what I would try to do is to make them match your taxes. If you go through a CPA, they can give you the great categories that work best for them. You can do that. If you use TurboTax like I do, they will also tell you the categories that they track, and you can just pull them straight out of TurboTax and just line your categories up with them. One, it makes doing your taxes 10 times easier, but two, they'll tell you exactly what the category is and what types of items go underneath that. So it's another great way to do it. But do I want you to have 100 categories? No. But could you have somewhere between 10 and 20 categories? Yeah, it's possible. I think I had 20, maybe 25 for my basket. But I'm really anal, and I kind of broke some of those down. But the key is to know where they all roll up when you do your taxes. All right. So far, we know you want to know your sales, revenue, income, your top line. Then you want to know what it costs to put your goods together. So what your cost of goods are. The third number that you wanted to make sure you understood was your gross profit, which was your income minus your cost of goods. And now our fourth item we talked about are your expenses. So from our gross profit, remember, income minus cost of goods is your gross profit. From your gross profit, then you're going to take off your expenses. And what this is going to do is this is going to end up being your net income. Okay, your net income is the next number that you need to understand. Now, I want to take a step back for a minute. Remember earlier, I kept talking about payroll. Your payroll, in most cases, are going to go under expenses. If you're part of a franchise, they'll have you break out sometimes where the management goes and where the employees go. If you're just a regular Joe and you've got some employees, you can put them under expenses. That's the best place to put them. If you want to put them under your cost of goods, that's fine too. Like I said, don't get too hung up on that. The important thing is that you capture them. They are an expense of your business. They're a cost of doing business. So to me, I like them under expenses. That's personally just where I like them. You're not going to get, there's no police that's going to come after you. There's no government agency that's going to kill you because you put it under the wrong category. So put your employees underneath your expenses. And the main thing to know is that your employees can be one of the highest amount of money that you can spend in your expenses. They're one of your most controllable operating expenses that you have, because that's really what they are. They're an operating expense. Now, that does not mean do not hire people. It does not mean pay people what they're worth. I absolutely want you to hire people. I want you to pay them what they're worth. It's what you get out of them that matters. That's a different podcast episode. I've done that. I'll cover it in the future as well. I'll have courses on it in the membership site. But I don't want to get too hung up on people. But I just want to make sure that you do capture them under your expenses. So once again, go back. Number 5 thing that we needed to know was your net income, your net profit, and that is going to be your gross profit minus your expenses, and that's going to give you your net income. And basically, this is the amount of money that's kind of left over after you pay everything. And from here, this is where your profit is. A lot of times people call it your profit, and it's going to be your net income. Now, don't get too carried away. There is more to your net income, and some of that money is going to disappear because you still have to pay your taxes for the business. You have to have retained earnings. So don't think that your net income is what you get to take home, that you get to pocket and you get to run away with. That's not the case. From that number, you might recall we've already talked about you need to set aside money for taxes and you need to set aside money for retained earnings. But from your net income, that's really where you're going to start paying yourself. Unless, of course, you are considered an employee and you're on the actual payroll, like you have other employees and you've put yourself into that payroll, which I do recommend that you do. It saves you money on taxes and stuff like that. But, majority of your income is going to be captured under those expenses. So when it comes to your net income, this would be your bonus money, if you will, after you've done your taxes and after you have done your retained earnings for the company. I don't mean to make that more complicated. It just everybody's in a different spot when it comes to your business, but just know at the end of the day, your net income is basically the bottom line. And then from there, you're going to pay your taxes, retained earnings, and then the rest is the company profits for you. Can you get more in detail when it comes to depreciation and some other things? Absolutely. But I don't want you too hung up on that. All right. So the 5 numbers from your P&L, from your profit and loss, I'm going to highlight these before we go to those last 2 items I want to talk about. You have your top line, sales, revenue, income. That's your top line. Your cost of goods sold. You need to understand that one. Then you have your gross profit, which is your income minus your cost of goods. Then we've got your expenses, which include your payroll if you have any. So all of your expenses for your company, and then that's going to give you your net income. Your net income is the money that's after you've paid everything under the sun. And from there, this is what you're going to owe taxes on. And this is where you're going to save money to retain in the company as well as to pay yourself. Hang in there with me. I know doing numbers on a podcast are not the best thing in the world, but I do think that this is very important that you understand this. And hopefully this is starting to settle in a little bit more for you. All right. Now, with these numbers, this is where you're going to be learning about the other two items that you really need to understand. The first one is your gross profit margin. All right. This is another one that you need to understand. Your gross profit margin, how much money you're making after you take off your cost of goods sold. So let me kind of step back for a minute. Remember, let's go back to our first 5. Let's just say you sell $100. That's your sales. Remember the sales number? Let's say it's $100. Now let's say your cost of goods sold are $30. That left your gross profit. Remember, sales minus cost of goods. So your gross profit is $70. And let's say you have $40 for expenses. That leaves a net income of $30. So that's using those first 5, right? So now if we come back to your gross profit margin, we know that it's going to be your gross profit, which we already identified as $70. Remember the $100 minus the $30 in cost of goods sold. We're going to take your $70 and we're going to divide that by your sales. So your sales were $100. That left your gross profit margin is 70%. Basically, it's the amount of money you make after you take off your cost of goods sold. That's all it is. It's your profit, your gross profit converted into a percentage is basically all that is. It sounds way more complicated than what it is, but it's just your sales minus your cost of goods and then converted into a percentage off of your sales. So in our case, it's going to be 70%. The next percentage that you tend to hear a lot of is called your net profit margin. And this is going to be, once again, using those same numbers. If you recall, our bottom line number after our cost of goods, after our expenses was $30. Remember, we made $30. That was our net income, our net profit. So our net profit margin is going to take that same thing. We're going to take that $30 that we made at the end of the day, divided by our entire sales, which left us a net income of 30%. We're making 30% off of our money before we pay taxes and before we do our retained earnings. Now, are you going to be talking about gross profit margin and net profit on a regular basis? No, but it's important you understand that when people are talking about it, all they're doing is they're converting the dollar amounts over to a percentage. And what this does allow you to do is to be able to identify future numbers. So when you're doing projections, this is where the percentages come in. And this is why they're so important, because you want to know how much you're keeping of each one. So if we know that we're keeping 70% after our cost of goods and we're netting at the end of the day 30% off of our sales, we can now take those percentages and equate them later on. So if you want to increase your sales and get to a certain number, so for example, you're currently doing $100 and you know you need to do $500, you can actually kind of work backwards using those two numbers to know what it is that you're going to do within certain categories. So if you know that your gross profit percentage is 70%, you can take that $500 times the 70% and come up with approximately what your cost of goods are going to be based off of your current situation. Same thing as if you know you net 30% after everything in your net income. You could figure out $500 times that 30%, and it's going to tell you what your net income is going to be. That's the only reason that those percentages really come in handy for you. Now, I don't mean to be blowing your mind, and some of you are like, oh my God, Tammy, my head's exploding. Why did you do this to me? This is not what I wanted to do. Listen, remember, we're wearing our big boy and big girl panties right now and underwear, whatever, underoos, whatever you want to call it. And we're stepping up to the plate because we're CEOs and we want to understand our business a little bit better. So it's important you know these terms and you know what they mean. So just remember that when you start getting into gross profit and gross profit margin, both of them are equating to how much money is left after your sales take away your product costs. Whenever you hear net income, that's after you take off the expenses as well. So whether it's a dollar number, or which would be the net income, or a percentage, 30%, 25%. That just means that's about the percentage you keep after you pay everything. So hopefully these 7 terms are giving you an idea of what you really want to understand with your business. Are there other terms you need to know? Can you know? Should you know? We can debate that all day long, but these 7, absolutely every small business owner needs to understand. You need to understand your sales, your top line, okay? Your sales, your revenue. That's number 1. 2, your cost of goods sold. You need to understand that term and what it stands for. You need to understand your profit margin, which is your sales minus your cost of goods sold. You need to understand the term expenses. That's the money you spend on everything else. Then you need to understand your net income, which is your sales minus your cost of goods, got you to your gross profit. Now we take off those expenses and now we're at the net income. And then finally, you need to understand your gross profit margin and your net profit margin, which are just those same numbers converted over by dividing them by your sales. Those are the 7 things that if you walk away knowing, you're going to be more dangerous in conversations and understanding your business. And by doing the exercise of them every single month, I'm telling you by categories, this is what's going to blow up your business. Because when you're working on your business, you're going to dive into each of these categories. And here's where you're going to find sales opportunities. Here's where you're going to find profit opportunities. And here's where you are thinking and acting just like a CEO of your business. I understand you love what it is that you do, but you also need to love the business side behind the scenes of what you do. This is what takes you from an employee to a business owner. And if you don't want to do the number side of it, then you should not be a business owner. Or at best case, don't gripe that your business doesn't take off. Your business doesn't take off because you treat it like an employee would. If you really want to be a CEO and understand your business, you want to make sure you understand these numbers. I don't want you spending 20 hours a week on them. I really don't. But I want you to understand them and be able to use the information to leverage how to create more sales and more profits and take your business to the next level. So I'm sorry I blew your mind, in some of you in a good way, some of you in a bad way, but hopefully at the end of the day, you understand. And this is the kind of stuff that I really want to continue to try to help you out with. We'll continue to talk about not only here on the podcast, but I plan to continue to put into the membership site. If you're listening to this in the future, you want to check it out over at localsmallbusinesscoach.com. I'm sure once I get the site up, we'll have, we'll add that to everything. But there's at least a sign up. If you're interested in getting into the membership site, go on over to localsmallbusinesscoach.com. There's a link right there you can hit that says you're interested in following along for when the membership site opens, because I want to do this kind of training with you guys to help take you to that next level. And then once again, you can always check us out over at the Facebook group, Badass Local Small Business Owners. We're going to try to talk about some of that stuff in there. My whole goal is, how do I keep helping you take your business to that next level? And I'd love to hear from you. That's what Thursdays are all about. I take questions from everywhere, and that kind of leads into a lot of our topics. So feel free to email me if you've got a question or a topic. Tammy@localsmallbusinesscoach.com. Once again, Tammy@localsmallbusinesscoach.com. I'd love to help you out. Matter of fact, I need to, a lot of people are asking me about coaching and spending some time with me. I'm going to be putting something up on the website here soon, so that if you want to try to do a strategic one-on-one coaching call, we can do that as well. So I'm going to get that up. But in the meantime, I just want to keep blowing your mind. I want to keep giving you information that you can use to take your business to the next level. And I want to challenge all of you guys that sometime in the next 24 hours, I want you to sit down and look at these 7 things. I'll put them in the show notes. But I want you to dive in and make sure that you're familiar with these 7 terms, so that way you can have good conversation about your business. All right. With that, I am going to go ahead and get out of here, because guess what? I am tired of talking. It's been a long episode, but thanks for sticking in there with me. And with that, I am out of here. So I will see you on the next episode. Bye for now. Hey, badass local small business owner, before you go, if you would like to join our Facebook group, come on over. Go over to Facebook, and in the search function, put in there badass local small business owner. It's going to pop up the Facebook page. We're just starting out, so be one of the founding members here in this Facebook group. It's going to be different than the other ones. We're not going to be blasting marketing materials and any of that junk. No, this is real life questions. We're going to help each other out. And yes, I'm going to be in that room as well, checking in on you guys and answering your questions. So come on, join our Facebook group, Badass Local Small Business Owners. Type it into the search function or look in the show notes and click there, and it will take you there. Join us, won't you?